And the IMF Managing Director, Christine Lagarde, for one, thinks Africa's debt problems could very well worsen in 2018 as the dollar appreciates and the U.S. raises interest rates. According to her, yield-hungry bond investors were so eager to lend that they were not very serious about assessing the risks. Now, joining me to look at Africa's markets in 2017 and an outlook for 2018 is the founder and CEO, Rich Management Limited in Nairobi, Ali Khan Satchu. Hello, Ali. Thank you very much for coming through to us.
It's a pleasure. Thank you for inviting me.
So what is your general assessment of the Sub-Saharan Africa markets in 2017, from currencies to equities and bonds?
So equity markets were in a real sweet spot throughout 2017 in practically every jurisdiction except the Bourse, which in West Africa, which has the 6 countries, including Cote d'Ivoire. And I think that was the only bourse that closed the year lower. Nigeria, of course, was an alpha performer, up 50%. South Africa was up as well, notwithstanding the problems with the politics. A lot of that increase in South Africa was driven by NASFAs, who have a big stake in Tencent, which just simply went off the charts. Here in Kenya, notwithstanding the election, we rallied about 20%. So equity markets did really well. There was plenty of volatility in the FX markets, South Africa in particular. Sometimes I used to joke tongue-in-cheek that President Zuma must have been trading the rand because so many of his interventions caused enormous volatility. Nigeria, I think, remains the conundrum. You haven't looked to narrow the official and unofficial rates substantially. I think what we're seeing in Angola in the last few days, where the central bank has now thrown in the towel and says they're going to unify the currencies, the way forward. Egypt did it a couple of years ago. So there's plenty of leadership, and I think it's high time that Nigeria participated in ironing out that FX anomaly. Best performing currency in the world was, in fact, out of Mozambique. The Mozambique Metical, up 20%. Mozambique bonds, which collapsed, rebounded very strongly. So, in terms of the bond markets, particularly hard currency, for the most part, the point you are making about international investors, what Madame Lagarde was saying, look, anything that's at a yield which has been above 0% and 6, 7, 8% yields have looked extremely attractive to them. And they've just shut their eyes and bought these bonds. And I think the problem is, when they take a step back and say, hang on a second, maybe the global liquidity situation isn't so great, we might see some withdrawal of that money that's floated our boats last year. And then, so I think overall it was actually quite a good year for investors, particularly those in the stock market.
Okay. Now, what key challenges do you see in the new year for the regional markets?
Oh, there are plenty of challenges. I think, that those comments that Madame Lagarde made are the biggest challenge of all, because, what we have in the Western world is an extraordinary Wizard of Oz monetary experiment. It can't continue forever. And at some point, it's going to come unstuck. Interest rates are going to rise. Bond yields are going to rise, and of course, then we're going to come under pressure as well. So to me, that Lagarde risk that she pointed out ranks number one. A lot of our countries have overspent. We've borrowed a lot of money. We haven't put it to work properly. Our returns have been suboptimal. We've kind of thought China is Santa Claus. They're not. They're going to take our assets, like they took the Sri Lankan port, Hambantota, when Sri Lanka couldn't pay them back. So our debt loads are too high. Our returns on our investments have not come through. We've got to be very, very cautious about that. But just to give you some bright spots as well, I'm bullish about Zimbabwe. I think we're going to bounce off the bottom. I wish President Emerson had been more inclusive. I saw he went today to visit Shanghai. but I think, he would have done better to go for a government of national unity. But from an economic perspective, everything he's saying is right. Plus, Benedict Aroma from the Afrexim Bank is throwing him $1.5 billion US. That's going to be sufficient for the economy to bounce off the bottom. South Africa is a big story this year. President Zuma's exacted enormous haircut on assets. President Ramaphosa is going to trigger a repricing.
Okay, Ali, thank you very much for your thoughts there. Thank you for your time. That was Ali Khan Satchu, the CEO, Rich Management Limited in Nairobi. We'll take a quick break, and when we return, global debt rises to a record $233 trillion. To stay with us.